Hello traders, Gary Wagner here, 1250 in Honolulu, 550 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 28th of January, 2022, and this is the Daily Report for Gold and Silver. This is our weekend review, and what a week we have seen with major sell-offs in the precious metals, with the exception of palladium, and sell-offs in U.S. equities throughout the week, with a slight recovery today. Gold did decline today, but much less significantly than we've seen over the last two trading days. $1,790.10, down $3 is the current fixed price of the February contract. They will be moving to the April contract soon. Dollar strength has accounted for a lot of the decline, but today was actually down by 0.03%, a fractional decline currently fixed at 97.21. And silver had a pretty steep decline, giving up over 0.8%, 0.82%, a decline of approximately 19 cents, closing at $22.49, basis the March contract. To give you an idea of how volatile this week was and how much we saw gold drop in a single week, we simply need to look at the chart that I have just put up on the screen, a 15-minute candlestick chart. Wow, trading was pretty lackluster as we waited for the Federal Reserve, because this takes us up to Tuesday night in the United States. In overseas trading, the market did rally for a bit, trading to a high of 1851, and then dropped as we got into the open of New York. That is where this occurs, and that is also when the Federal Reserve released the statement from this month's FOMC. In essence, this statement said that they would shortly begin liftoff, or the initiation of interest rate hikes, beginning as soon as March, and that did take the market a little bit lower, but only down to about 1830. It really wasn't until Chairman Powell began his press conference, that is this arrow right here, that we saw a significant drop in the market, taking gold lower and closing on Wednesday at approximately $1,814. But the selling pressure continued on the following day. We saw the release of the fourth quarter GDP that occurred here, and that took pricing down to about $17.90. Market recouped just a little bit, but then sold off vigorously once the Commerce Department released the PCE, or inflationary index preferred by the Federal Reserve, showing that inflation in December jumped to 5.8%. The net decline on the week from Monday's open to Friday's close was approximately $58, with a price range or price swing of approximately $78 this week. We will go into my forecast for next week by looking at support and resistance levels. But first, I do want to point out what I find to be one of the most alarming technical features of the week. We are looking at a daily chart. It is blown up so that we can view the 50 and 200-day moving average. Of course, the 200-day moving average is in red, and it is in black for the 50-day. It does appear that it is imminent at this point that we will see the 50-day moving average cross below the 200-day moving average, forming what is called a death cross. Currently, we have a 20-cent differential between the 50 and 200-day moving average, with the 200-day moving average at 1805.50 and the 50-day moving average at 1805.70. As we did yesterday, we are going to look at various points that gold could find support based upon two different Fibonacci retracement data sets. The first one moves from the highs at 1920 down to the lows at 1678. The second one goes from the lows of 1758 up to the highs of 1880. Those are drawn in red, while this data set here is drawn in black. On yesterday's show, we were looking at the close of the day, which came in at approximately 1792. That, of course, is this low right here. And we talked about the two key and critical areas to look at, which is the 78% retracement. That's from this short data set, as well as the major support, which I believe exists at approximately 1770. Now, although we have seen a death cross occur, that doesn't mean that the majority of the selling pressure is over. Realize this is lagging and created from data that's a 200-day and a 50-day moving average, extremely long when compared to real-time data. And I said that I believe that it is likely that we could see support at 1785, based upon an area in which we found this to be an area of support, and in fact might prove to be an ultimate support, indicating a potential bottom and conclusion to this week's sell-off. While you can see that on our chart, it appears as though gold closed at 1785. We are looking at gold futures at about 1790, basis the close in New York. This could be the final moments of Globex, taking it up approximately $5 from this candle. However, what we want to do is pay close attention on Sunday as the market reopens for trading next week and see if we see any spike to the upside, and that could indicate a buy trigger or a trade alert to be sent out. If we see gold decline on Sunday and move below 1785, we would have to look for the next level for a potential bottom, which occurs at the 38.2% Fibonacci retracement, which is $1,770.80. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.